Hello guys, so we are now in Hong Kong at PayFi Summit just before Consensus, and here with you Anna Tutova, co-founder of Coinstelegram, and our guest Nick Van Eck, who is founder of Agora Stablecoin. Great to have you here, Nick.
Yeah, thank you for having me.
So can you tell us about your background and how did you initially get into crypto and blockchain world?
Yeah, so I come from an asset management family, so I had, financial markets were sort of a part of my upbringing, and I was working for a hedge fund in 2016 when I first got exposed to Bitcoin. And so the founder of that firm was actually buying Bitcoin at the time. And coming from a family of gold bugs, it resonated with me. So I looked into the asset, started buying Bitcoin then. There weren't much developers or applications around. It was even pre-ICO era. And so it was mostly just buying Bitcoin.
But was there Ethereum already or not yet?
Not yet. So I made the mistake of not buying Ethereum. I bought Litecoin instead. So Ethereum was trading at like a few dollars, but I didn't really understand the idea of smart contract technology or this decentralized compute network or this idea of like a peer-to-peer cash system, and digital gold made sense to me. So it wasn't Ethereum yet. And that's when I first started, getting into crypto. Obviously, the ICO boom happened, and there weren't really many companies in the space, and so I continued with my day job as a technology investor. Spent most of my career focused primarily on enterprise software technology, and then DeFi summer happened. And it was very clear to me that blockchain was just going to eat financial services and payments in a very similar way to how cloud software was eating on-premise software. And so I convinced the managing partners at my firm to let me invest in the space. Did that for about 12 to 18 months, and then decided I should just go build the company that I believe should exist. And so that's when we started Agora with my two co-founders, Drake and Joe. We've been around for a little over a year. First deployed the stablecoin about 6 months ago, and have a lot more products coming soon.
Yeah, so the idea of starting a stablecoin is not new. There are already giants like Tether and Circle and as well MakerDAO. So why did you decide to make your own, and how is you different?
Yeah, so I think people don't segment stablecoins enough. I think the way that I view the world is you really have centralized stablecoins that are like fiat coins, right, backed by dollars in a bank or Treasury somewhere. And that's the vast majority of the market, right? Like even like DAI or Sky now, right? It's like a decentralized stable. And you're catering to a very different user than someone that just wants dollars on chain, right? And so you had this duopoly between Circle and Tether, where I sort of felt the money was broken. Tether, obviously not really interacting much with their community or their participants or the businesses that utilize it. They had a few market makers that touch the asset. That's about it, right? If you want to call Tether, no one's picking up the phone. And in Circle's case, they were much more hands-on, but they had this really conflict of interest with Coinbase, where Coinbase actually makes more money from USDC than Circle does. And so if you have USDC on Bybit and Fireblocks on Solana, you actually are sort of funding your competitor, so to speak, because Coinbase has the exchange, the custodian, the chain, wallet, staking. And so I wanted to start by fixing the money and building a centralized fiat coin issuer that worked much more closely with its partners, right? And actually delivered a lot of the economics back to the businesses and protocols that were using it. And so we sort of started with a stablecoin, but the intent is to really move up through the infrastructure and application layer to better serve all these businesses that are touching dollars on chain.
So your target audience is different. So you target more enterprises, businesses, rather than retail customers?
Yeah, I would say they're primarily our target, although we of course have like a very big presence in DeFi, and retail will inevitably touch our dollar asset. But our view is that most of the times retail is touching these assets either through like a protocol, like a DeFi app, or centralized application that could be a fintech, it could be a bank, it could be an exchange. And so by closely working with these businesses, we can better serve their end retail customers. Because what we can do is go to a centralized exchange or a DApp and say, hey, we'll share the revenue from AUSD on your platform. And oftentimes what they're doing is taking that income from us and using it to either reward their users or reduce fees on assets. And so in many ways, using a lot of these businesses as conduits to touch individuals or retail.
So with what type of businesses do you work mostly?
Primarily today, I sort of bucket it into DeFi and CeFi. So DeFi, it's lending applications, perp dexes, or other sort of on-chain financial instruments. And then on the centralized side, it's fintechs, centralized exchanges, custodians, just payment businesses that are moving money cross-border. And so a wide array of customers, because at the end of the day, we're just providing money, right? And everyone in the world touches it, whether you're a chain ecosystem or a traditional business. And so with some of the products that we're going to announce today at PayFi Summit, you'll see us starting to service more traditional businesses, because our goal is to bring a lot of traditional companies on chain and do so in a way where they don't even realize it, that they're maybe interacting with crypto. They just know that I can now send money much cheaper and much faster globally. And so that's a lot of what we're trying to do.
So can you share more? What businesses are you bringing on chain
Yeah.
now?
So a lot of the products that we'll announce today are focused on cross-border payment companies. So now within the Agora dashboard, you'll have one financial operating system. So you can view your fiat assets through linking your bank accounts and then all of your on-chain assets. We're going to start to offer embedded wallets, as well as have companies bring their own wallets. And then finally, you have one place to do all of your sort of FX and transactions on chain. So if you want to move money from HKD to a stablecoin or vice versa, we'll offer that to you within our own web application. And so continue to better serve these businesses that are already touching us today for the stablecoin, for all these other sort of ancillary money service types of products.
So is this movement via other your payment gateway partners, or are you building as well your own?
Yeah, so we're actually leveraging a lot of other partners, right? So on the FX side, we're going to be leveraging several different partners to try to get the best rates for our customers. Something that we're not announcing today, but I'll tease it on the card side, will involve another partner. And so what we want to do is bring together a lot of these specific functions, whether they're around like cards or FX, into one really nice interface that traditional businesses or even crypto companies can use. Instead of having to log into your banking portal or your expense management company or Fireblocks or Coinbase, all sort of in one view in one financial operating system. And so that's what we're delivering for businesses, and excited to share more on stage in a few minutes.
Yeah, that's cool. And as well, you talked a lot that you focus quite a lot on emerging markets like Latin America, as well Asia, Southeast Asia. So can you tell more about that? It sounds as well like the strategy of Tether. They target the same markets as you.
Yeah, so I think the Tether team is exceptionally smart, right? Which is why they're targeting those markets. To me, the real market for stablecoins and this blockchain-based financial infrastructure, in some ways, it's really only for non-Western countries, right? Countries where they have high inflation or underdeveloped financial markets, blockchain-based financial markets can really fill that gap, right? And enable people to store their wealth, access new financial opportunities. Whereas if we're being intellectually honest, I'm an American, I live in the United States, it's pretty easy for me to send dollars from one person to another, and stablecoins, aren't that much better than Venmo, right? And so, I think it's important to go to where the improvement is 10 to 100x better than the status quo today, and that's often not the United States.
So which countries are the most active in terms of markets for AUSD?
So for us, it's APAC. So primarily Southeast Asia, Singapore, Hong Kong, as well as Latin America. So Mexico, Argentina, a lot of the Spanish-speaking Latin American countries. We haven't done much in Brazil yet, but we'll focus there more later this year. And then we're also putting a real emphasis on Turkey as well this year. So we just hired our first employee who's based there, who's really focused on developing that market for us over the next 3 to 6 months. And so the hope for us is to really grow presence in Latin America, Turkey and MENA, as well as Asia.
Yeah, that's a big expansion. And what about Africa? Do you target this region as well?
Yeah, so we'll eventually be focused on Africa as well, but that's probably somewhere that we're going to start to focus on either towards the end of this year or early next year.
And do you plan only to focus on stablecoin USD, or do you plan as well to issue other stablecoins too in the future?
So the current plan is just USD, but we're having a number of different partners that are asking us to do other currencies, and so if we start to see increasing demand, we may decide to issue other local currencies.
Actually, AUSD sounds like Australian dollar.
It does, yeah. It's funny. People say that, and for us, we joke. The reason why we actually called it AUSD is because we always wanted it at the top of the alphabetical leaderboard, so to speak. But we've been joking, ever since Trump's won that it stands for America USD as opposed to Agora USD.
Yeah, it's funny. And how do you see currently the crypto developments in the US with Trump as president?
Yeah, I think the major difference is that you have a less active enforcement agency, right, that is going after companies, right? And so it seems, and this has obviously been stated publicly, that a big emphasis of this administration is going to be crypto and enabling crypto companies to really thrive in the United States. Not much has changed on the legal front yet. There hasn't been any bills that have been passed yet, but the Treasury Secretary, comments from the Fed have been much more positive towards crypto. And then obviously we have changes that are happening at the SEC where they've sort of reduced their enforcement actions. And so it seems like there's going to be a focus on innovation within crypto again in the United States, which is great for the world. And Europe and Asia sort of had the lead over the last couple of years during the administration that we had. But I think you'll start to see a lot of investment pick up in the United States, which is great.
And as well, what's your opinion on CBDCs, especially here in Asia? There are quite a lot of active projects like Project Guardian by Singapore government and many others.
I'm very anti-CBDC, mainly just for political reasons. I think when the government can entirely control one's money like that, not to say that there's not ways that they can sort of control people otherwise. I just think it's a little bit more pernicious when they can sort of have that sort of direct relationship with the individual and their money. So I'm relatively anti-CBDC.
I guess everybody in crypto is against CBDCs.
Yes.
And as well, are you profitable already with your stablecoin?
Yeah, so we're growing very quickly. We're probably going to hit break even in Q2 this year.
So where do you allocate your profits? Do you reinvest back into business?
Yeah, primarily it's been reinvesting back into the business. We don't need to raise money anytime soon, but we see a lot of opportunity in the space, and we've been getting a lot of inbounds from investors, and so we may take on additional capital to invest more heavily sort of in the growth strategy, but also in new products. And I think it's very clear to me that stablecoins are going to go, I think, from 200 billion to 10 trillion over the next decade or so, and really start to replace the euro-dollar market. So it's just the beginning of a very long journey.
So what's your vision for the next years for Agora?
Yeah, so I think our hope is hitting a couple $2 billion in AUSD outstanding, which we expect to hit probably sometime in Q3, Q4 of this year, with a few unique projects that we have in the pipeline. So I can't really share more yet, but that'll be exciting. And then beyond, obviously, revenue, TVL, it's just better serving our customers, and so launching new products that help bring net new people on chain, which is why here at PayFi Summit and super excited to hear what a lot of the panelists and folks have to say, because there's fundamental to sort of the blockchain revolution is the velocity of money and the ability to move money from point A to point B much faster, and stablecoins help enable that. And the cross-border payment market is trillions of dollars, and we think we can start to tap that with some of the new products that we're launching. So super excited about that.
Yeah, and how do you see the current crypto market?
The current crypto market, I think we're really risk on for a while. After Trump won, I think there's a lot of enthusiasm in the markets. I think it'll be maybe a little bit of a softer period for the next 6 months, maybe 12 months. Which is good. I think it's good and healthy for markets to take breathers. And frankly, that's, I think, the quiet time in the market is the best time to build. And so, for us, obviously, as a stablecoin, that, we don't have a governance token, so we're sort of immune to this, but a lot of people, within the crypto space, it can sort of change their mood or choose them to focus on, I would say, more strategic, longer term, projects. And in many cases, it's good for us, right? Because we're driving a lot of this economic value back to these businesses, and so that revenue is meaningful, and then we get a lot more time with our customers, which is nice.
And do you invest yourself into altcoins?
I do not have the time to invest into altcoins. Primarily just BTC.
Solana.
I'm very bullish on the Solana ecosystem, but yeah, I really only have BTC and cash.
So you're like Bitcoin maximalist now.
I'm not a Bitcoin maxi. I don't have. I sort of view our business as indexed to these ecosystems, and I sort of view that as my leverage to those assets. Yeah, at the end of the day, I just don't have the time to monitor an active portfolio. But I sort of view ourselves as a derivative of the success of many of these protocols, anyways.
What do you think about meme coins?
Yeah, I'm personally not a huge fan of meme coins. At least in their current iteration, they're clearly like very extractive, and yeah, to be honest, like I think they're bad for the ecosystem in many ways, especially when we've gotten to sort of this like late stage meme coin era where it seems like it's clearly just value extraction from retail, which I think is not good. I think when they first came onto the scene, they were funny and had maybe a different and were more organic in their growth in some aspects, but I think now it's just very clearly manipulation, and that's not good for the space. And for us, we're focused on really like driving, I think, a lot of real activity on chain and traditional financial activity on chain. So beyond that, I don't really spend much time thinking about meme coins.
Yeah, that's important. Actually, it sounds that as if your family business, Varnik Asset Management, is more degen than you.
Yeah, well, so those are the people that are actually spending the time investing in the altcoins, right?
And as well, meme coin index too.
Yeah. So yeah, that's an index, right? But they have the liquid fund, they have the venture fund, obviously the ETFs and the ETNs, and so yeah, I guess maybe that's probably my exposure to those types of asset classes is through VanEck.
And do you have any predictions for Bitcoin all-time highs this cycle?
Yeah, I think maybe we hit like 150, 160K. I think the cycles, I could be totally wrong, but I think the drawdowns are going to be a lot less severe going forward now that we've really started to institutionalize the asset class. And you have leverage traders becoming less and less of the holders. I think you'll see the price sort of remain much more elevated than in past cycles. So yeah, maybe 150, 160K.
Well, let's see. That's not a bad prediction. Quite realistic.
Yeah, it's good. I mean, like when I first, when I was first getting into Bitcoin, it was a couple $100. So we've come a long way. I think even 10 years from now, we'll be much higher than where we are today. So.
Yeah, that's true. Thank you for such interesting conversation.
Yeah, thank you for taking the time.